facts from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in February 2nd, 2022. And Google just saved the stock market with their earnings and stock split. Today, after hours, was absolutely insane. You got a killer earnings out of Google. Today, struggled for direction, but then we got a little bit of upside at the end. But now, a 10% beat on Google has a lot of implications. But then, AMD also surged. The chip makers are going to be up tomorrow. There is a lot of excitement now, and you also got some walkbacks from the Fed. Now, we did continue the streak. Today is the third positive day up, 1% on the S&P, and this is now the largest 3-day rally since April 2020. A lot of people are talking about, okay, third wave, maybe we get a full bounce, but either way, we are in an interesting scenario, and now with some of the earnings coming in good, you should start seeing some attitude shift. So, we got a lot to talk about. I'm going to go over everything that happened in the market today, what we're looking at tomorrow, the plays that we made, and we made a couple, and then the plays for the rest of the week. So, drop your thumbs up on the video, and big shout out if you have been. But right off the bat, like we said, Google did save the market, and now the chip makers, again, you got TSM a couple of days ago. That one was good. AMD absolutely blew it out of the water. This should save the market until Friday. We are going to get the jobs report, but now this is all assuming that there is no more crazy guidance coming out for rates. We don't get anything hawkish out of the Fed. And now, before I get to the pretty picture, to really summarize what you're getting and what happened today, there really wasn't much news. We did start out the day with some economic data, but the thing was, it was very mixed data. It was both good and bad, and now the market doesn't know which one to take, because if it's good, they're going to get worried about a very aggressive Powell. If it's bad, then it's going to highlight a big economic decline. Pretty much all of the data that we got is right in the middle. It's not the best, it's not the worst, and now it really does put a lot more eyes back on what the market is expecting and what everybody from the Fed has said. Now, given that we've had good earnings from Apple last week, and now you got Google and AMD today, the earnings have been good, and this is a good sign. But now what we've been seeing the last couple days, even all of this week, as we have been experiencing the bounce, you've gotten to hear from a lot of the Fed members, and pretty much Jerome's teammates have walked back his ambiguity. So yesterday, you had Esther George. Today, you had Bullard, and both of them have taken that 50 basis point hike. That double hike has been removed off the table by their speeches. You have been watching the Fed futures. You've been noticing that one has chilled out, and pretty much now both Bullard and George are some of the biggest hawks in the Fed. So we got to hear a lot again. You even heard from Bullard and a couple of other people. I forgot who the other one. I think it was Harkin this morning, but we've gotten to hear from a lot of Fed members already, and a lot of them are walking things back. And the one thing now Bullard said today, he said 5 is a good bet. So like we talked about at the beginning of the week, the main thing here is earnings. You're watching it so far look very, very good. So the next big key is pretty much going to be the jobs report on Friday. And unless there is a really big company that gets a bad report, we should be relaxed. And then a lot of the other catalysts are going to go into the next week. So this kind of explains what you saw today. Again, we really didn't do much. It's not as if we had the same up and down volatility. Even when it did look weak here in the morning, we were still elevated. It's not like we were doing the big swings that we saw last couple of weeks. So that was good. We had the end of the day run up here, and now with this earnings, it could drive it home, but you definitely saw there wasn't any news driving it. This was all just getting ready for earnings. Now we got the little green light. We're going to see what happens with the data on Friday, but as we kick February off, it looks like our next big catalyst and really the information we're looking for from the Fed, it's probably going to come out here in a week or two. So coming back to the first pretty picture, I can't zoom in because this is a big chart. This is why I wanted to explain kind of the summary of this week and what's going on, because it's pretty much the Fed versus earnings. Earnings are looking good, and now we really got to pay attention, because if you have been watching the Fed futures, there has been a lot of movement and a lot of divergence. So what this chart is showing you is every single bank and all of their expectations. So you got Bank of America, they are at 2% by November. So if you're starting at 0 right now and we go up by a quarter basis point at a time, that is 8 rate hikes. 1.5. That would be 6, but we're in the middle, so that's 1.75. So Nomura is expecting 7. Deutsche Bank is right there at 6 rate hikes. Goldman, 6 rate hikes. Citi, 6 rate hikes. Wells Fargo, 6. JP Morgan, I thought they were a little higher, but they're at 6 right now. Morgan Stanley, they're sitting there at 5, and then you got Standard Charter there at 5 too. So why is this important? Because this is the thing that we've been watching. Again, these banks are important because these are the ones giving a lot of their client notes and handling some of the big money, so we're able to see kind of what's going on. But now, if you've been watching this chart with us, we keep bringing this up, and now we went over this today on stream. You can read this a little bit better. Here is December, and you see this 1.2 number. What is that saying? 1.2 by December. That's about 1.25%. That means it is talking about 5 rate hikes. 4 to go from 0 to 1, and then a quarter point there. That would be your 5th rate hike. So this is what we've been talking about. If you do see this chart and you see it come up on stream, the real simple thing you want to know is that if this number goes higher, that is bearish, or if it goes lower, that is bullish, because essentially if things do chill down and people don't get crazy, that will be good. But pay attention, the banks are saying a lot of people are going back and forth. You're getting earnings. Now you're watching even bonds diverge from the market, but at the end of the day, a lot of Fed members are saying about 4 or 5 rate hikes, and pretty much the Fed futures are right there. So we're going to be watching this and watch for the divergence, but essentially now we got to see if we could ride the wave here with earnings. If it is able to hold up, we still do got a lot of the companies, and by the end of this week, we will have had almost like 30 or 40% of the S&P reported so far. So coming into the company news and events now, Google, they beat on top and bottom and guided higher. It was one of the best earnings, and they announced a 20-for-1 stock split. So there was news, or we read it there as if it was a special dividend. That's what they're saying. You're getting a special dividend of 19 shares for every 1 share that you own, and this will make Google a lot more accessible. We don't have the exact details yet on the cutoff date and all of that, but I'm sure we're going to get it very quickly. But this was a big beat. They were up about 10% after hours, a huge move, and it has a lot of weighting on the index. And then AMD, they beat on the top and bottom line, and they guided higher. It was an absolute monster of an earnings, so a lot of people got excited. And again, you did hear from TSM, so this continues this trend for the chip makers. But PayPal, they got clapped after hours, down 16%, and this was after their second guide down in a row on this year's forecast. So they did that last quarter. Again, if you were watching PayPal, stock absolutely got clobbered, but the reason why it got clobbered is the same reason that they reported here. Again, they lowered their forecast again after lowering it last quarter, so that wasn't good. And then Starbucks, they were down quite a bit, about 4 or 5%. They missed on everything, and they guided down. It was looking a little bit gloomy, but then the stock did jump back up a little bit. The CFO during the conference call, he said that he sees EPS returning to double-digit growth by 2023, so the market did like that, but we'll see where it opens up tomorrow. And then GM, they had the pop, lock, and drop and kind of stayed unchanged. They pretty much met all metrics, even their guidance. It wasn't anything too crazy. It was just pretty much the same as what everybody expected, except for they did give some positive comments on their plans for EV and what they want to do, and coming around with the chip maker crisis for the second half of the year. So not too bad. All of the earnings were mostly great. Again, you did get some losers, but a lot of the industries and a lot of the growth people were worried about, I mean, the earnings came in and confirmed it, so a lot of people will be excited coming into tomorrow. But that was the first piece of news. Coming into the second, SeaWorld, we got this one very early in the day. It was pretty wild, but they made a bid for $3.6 billion to fund Cedar. I guess it's another amusement park. They love it in Ohio, I heard. That's what they told me, but it was a pretty big move. The stock shot up. Even SeaWorld had a little bit of a pop, lock, and drop, but Fund said that they do need to review it, so we'll see how that one plays out. And then this was a big piece of news, and it's going to relate to Friday. And you remember last time they did this, I mean, it could kind of calm the market, but this one is a good development. But today, the White House and the Fed, they warned of a ugly January jobs report for Friday. So they said the reason is, on this report, they will be counting COVID illnesses as a job loss. So that's a little bit different, but you heard this from the press briefing. That was on behalf of the White House. I forgot one of the advisors they said. I think even Psaki talked about it a little bit, but then even Fed Harker today, he also commented on the January report saying it really won't be that good because of Omicron. So we already know this is going to be a big data point. There is now a little bit of guidance getting out in front of it. So just keep your eye out for February and what the number is and how the market reacts. But there was that. Then the NFL Denver Broncos, they are now going up for sale after a family legal feud. I thought that one was interesting. And then finally, Ford is going to spend up to $20 billion reorganizing for their EV shift. So this is on top of, I believe, the already $30 billion that they've already spent. And they even said they would consider doing a EV spinoff to take advantage of some of the value that they're adding with EV. So stock reacted to it. A lot of people got excited. Again, you even got some GM news. We'll see what happens after GM earnings and then coming into it. But Ford could wake up a little bit. That one would be good. Other than that, there wasn't anything too crazy. We got some Build Back Better news. Manskin said that it's dead. There was comments there on OPEC. Nothing too crazy. We did get Putin and some of the back and forth there, but it seems like nothing has really moved in any direction. But Psaki on the Whitehouse briefing, it seems like they don't want to de-escalate. So we'll see what happens, but no other developments other than that. It is all going to be about earnings tomorrow. We're going to get the upgrade and downgrades. You will see a lot of sympathies moving, and now the real question is, does the market chill out, or can the bond stay the same and the market goes back to normal, and now the market is fully prepared for Powell and everything else? So let us get into the plays. So right off that bat, I got 3 or 4 stocks that I'm looking at coming into tomorrow, but the first one should be obvious. Google. I was going to buy it in the post market. Again, any sort of split news, it has usually been good, so there will probably be a bigger movement on the stock pre-market. We're going to see how people take it, but as of late, whether it was Nvidia down to Tesla and even Apple a couple quarters ago, all of this split news has been responded to positively, so that was looking good. And on top of it, it's not as if they announced this with bad earnings, so you do get that earnings continuation and maybe even some big tech dominance out of Google where it is able to start leading things. So it was looking like Apple was that, but now it seems like Google may have the fuel here, so going to be watching that one in the morning. This is definitely going to be the first play to watch, so watch out for that. Then we talked about this play the other day, but I'm even going to look for some continuations tomorrow, and now we got confirmation and AMD's earnings was really good. So essentially, take a look at Qualcomm tomorrow for the sympathy. They're going to be reporting, I believe, later this week. They usually come later, but I do think it is this week, so that could be sooner than not. But I'm also going to be watching AMD for the continuation. So we have seen this volatile. Again, we've played a lot of post-earnings on AMD. The volatility will be crazy. A lot will depend on if the market holds up or not. Again, sometimes we get these big earnings and it'll last for like 30, 40 minutes, and then after that, it kind of turns into a cuck. So hopefully that doesn't happen tomorrow, but if there is activity, AMD should be good on the post-earnings. Otherwise, I am going to look at Qualcomm and see the premiums. The ones we got the other day, those are up about 30% for April, but a lot of the ones with time really haven't moved too much, so we may be able to snake the chain there in the morning. I'm definitely going to be keeping my eyes out on that one, but that is the second play. And then coming into the third play, I actually did make a trade on this one, a little bit random here, but IBM, and this one is a post-earnings continuation, plus the fact that it did kind of hold up as a defensive name during volatility. So if you go and look at the chart here with IBM, you'll see what I'm talking about. This was their earnings. Remember, they were going up with a lot of the volatility towards the end of the year. They dropped a little bit, but were holding up good. The earnings lifted them back up, and then they've kind of stayed stalled as the market has been going crazy. So if they do get past this earnings level, I think this is going to be the high. That's pretty much what I'm looking for if we could get some momentum. Otherwise, could turn into a dud, but this is the play. I grabbed 10 of the April 155 calls. Again, made sure I got time, and essentially, I grabbed these at like 31 or 32 cents, but the play is they're pretty much at the bottom. You can see here with the post earnings, they were trading more coming into the earnings. Surprisingly, they dropped on those final 2 days, and then they shot up, moved all around the place, but as of late, the April contracts, even with a decent amount of time, these are further out the money. They are at their lowest point, so this is what I was liking about the chart. We still could get clapped. It really depends on this, but if things do look good and this one does get some of the post earnings move, or things do get volatile and this could kind of get some of that defensive post earnings move as well, then I'm really, really liking this, but we will see what happens. And then finally, MSTR, I made a YOLO play on this. I grabbed one of the weekly puts for like $70. Again, we've traded this a couple times in the week, but they did report their earnings and it was a big miss on the EPS. I think they were expecting anywhere from a quarter to $1 per share of EPS, but it came in negative $8 per share. So we'll see how it is. The after-hour moves wasn't too crazy, but we'll see how it delays. I am definitely going to be watching this one. If it does get a little bit crazy, there could be some moves. Otherwise, it could be a bounce play, but I haven't really played it on the upside, so we will see what happens. As far as everything else, I made 2 other plays, and we're going to see one of these in the morning again for the post-earnings play, but I grabbed a Spotify, and I grabbed puts. I still have those old shares, one in the long term, and we had that bad cover call play, or that naked put sell, but I still got that. I was like, all right, maybe we could get some exposure, but essentially, they are at a key level. Again, any one of these growth companies, I mean, it could be a heaven or hell moment. We're going to see. So I did make a play. I thought there would be a post-earnings move. I ended up taking a loss on half of them, but I am holding some puts coming into this. Otherwise, watch out for Spotify in the morning. And then the other play, I grabbed GM Marches. I wanted April, but these ones were cheap and they had earnings. I was willing to take the risk. We'll see how this one plays out. Again, I already think it was already at the bottom, but I grabbed 50 of the GM March 80 calls, very far out the money. I got them for 6 cents. Again, a couple days ago, they were going for about 100% higher. They did hit 50% lower the other day. Again, a lot of volatility. This play was a little bit risky, but if we do get a larger move up and things kind of start to chill out, I think some of these could be a little bit profitable, but it is a big risk. Other than that, those were the main plays. Everything else, a lot of what we're going to be looking at tomorrow will be earnings. I'm really liking the Qualcomm. Again, they've already been strong, and even the reaction after AMD, this is some of those sympathy moves we were talking about, so watch out for them. Watch PayPal. This one's going to be crazy tomorrow, but now also watch Square. They also got this sympathy move, so this one should be exciting. You may see a lot of upgrades and downgrades tomorrow, so watch out for that. Starbucks, a lot of back and forth. We'll see. We talked about this one a lot today. Again, if it did go lower, I'm kind of looking for sub 90 to add this to the long term, but even then, I am going to keep a close eye on that one, so watch out for that. And then AMD, again, we'll watch the final continuation. Google, and then GM, and even Ford. Don't forget about them. Both of them had this news. GM was able to close up, so we'll see where it plays out, but Tesla was a little bit muted today, so keep your eye out on the automakers. Then Netflix, they absolutely killed it today. We sold out way early on those 440s. Those would have been like $2,000 a pop, so absolutely wild play there. Good to see, but Netflix is definitely leading, and pretty much watch for Google and Netflix to kind of keep that dominance, or you may see big tech start moving a lot of things, so watch out for that. Watch Walgreens. They kind of struggled today, or they were kind of fighting, but have that play from the other day. Going to be watching them again. Just pay attention to some of the defensive moves, and even with that, watch oil. XOM, they killed it today. Again, we got the puts and got clapped, but this was the best earnings in 8 years, so that was good. It doesn't look like oil's stopping anytime yet, so you have not seen the drawdown that we've talked about, so it has been a long time, but there is a lot of strength, but definitely keep your eye out for oil coming into tomorrow. And then MSTR, like we said, it was just weird. You didn't really get an after-hours move off the $8 miss, but we'll see what happens tomorrow. And then finally, TLT and the dollar. The dollar is now chilled back out, and it's doing what it did a couple months ago, where it would start to make this game go up and go down, only to kind of meet up at the same place. So bonds are slightly tilting downwards. We'll see how the rest of the month continues. And somebody asked a great question today. They're like, how is the market going up, but the Fed is pricing this and that? That's pretty much what we're going to see with TLT. Essentially, the only way the market can price in everything that we've gotten and the market goes back up, you need the stocks and bonds to diverge. So essentially, bonds would have to keep going down, TLT going down, yields going up, and the market able to kind of bounce a little bit. So it's going to be a little bit tricky here. We're going to be watching, but until we get a move on the Fed futures, really, everything has stayed the same as we've been bouncing. So that is the signal that we're waiting for. It will be a leading one, and there may be a little divergence, so be careful, but that will be our signal, and we should know what's going to happen, and it's probably going to occur in the next week or two, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, you ain't on a boat, baby. It's not going down, but the code loves you. I love you. I'm going to see you in the morning. Let's go.